Hello traders, Corey Mitchell here. Wanted to talk about which currency pairs to trade. There's a lot of them out there, so whether you're day trading or swing trading, we'll break it down, show you which ones to trade based on your trading style, also how often you trade. And you can always find me on Twitter at CoreyMitt and thestreet.com/Forex. So the premise of this presentation is to give you a few things that you want to work on. So as we're thinking about which pairs to trade, we want to figure out which pairs to trade, and then we want to write them down in our trading plan. Our trading plan is our written document that specifies how we trade. It makes things more systematic. It makes sure that we're trading based on reason. We make our trading plan when we're not trading. We sit down, we look at how we want to trade, what the most profitable way for us to trade is. We write those things down, and then that's how we trade. We don't want to trade just based on if we see an idea, oh, I'm going to try that, oh, I'm going to try this, oh, I'm going to try that. Because that, you have no way of gauging how any of that's working. Because one trade, anything can happen on one trade. It's how you perform over many trades. We want to have that trading plan. So we want to write down what pairs we're going to trade and then stick to those based on our strategy. So we're only going to trade the pairs that we're allowed to based on our trading plan. So on a weekend, whatever, go through this presentation again, decide which pairs you're going to trade, focus what strategies are you going to use for them, write it all down in your trading plan. Over time, you can add more pairs if you can handle it. We'll go over what that will look like and why you may want to do that, or maybe why you'd want to scale back if you start trading 20 pairs or looking for trades in 20 pairs. You start to realize maybe your performance is slipping a little bit. You're not quite focused. You could be doing better just by focusing on a few. We'll go over that scenario too. But the overall point is figure out the best way for you to trade. So let's talk about day trading first. These are just general guidelines to give you a bit of an idea. If you're manually inputting trades and you're trading on a 1 minute time frame, I would just trade one pair. The Euro USD is the best bet. If the Euro USD isn't moving a whole lot, the British Pound US dollar is sometimes moves a little bit more, so you could check that pair out. Here's a 1 minute time frame, the Euro USD. A lot of these big trending moves only last 3, 4, 5 minutes maybe, which means you got to be pretty constantly engaged to be in this pullback and say, okay, when the next move up happens, I'm going to be in. It's quite a bit of mental work if you're just hammering these trades out all day. So I would just focus on one. If it's a really quiet period or the pair's just not moving a whole lot, maybe you could add in another pair. That's for the 1 minute chart. If you're going to trade on a 5, 10, or 15 minute chart, you're still day trading, then potentially you could place a few more trades because you have a bit more time to react. Like I said, each one of these trends is maybe lasting 5, 10 minutes. And you're making assessments throughout this whole thing, possibly making a couple trades in each one of these waves on a 1 minute chart, depending on your style. But on a 5 minute chart, each one of these bars is taking 5 minutes, so as it unfolds, you have a bit more time to assess. You're probably going to be taking fewer trades than a trader would on the 1 minute chart. If you go to a 15 minute chart, you're definitely going to be probably taking less trades than either of these two guys trading the 1 minute or 5 minute. You have 15 minutes between each price bar. You're probably only going to be taking 1 or 2 trades a day. In that case, you could be looking at the Euro USD as well as some potential other pairs. Automated traders may also trade more than one pair since the automation takes some of the mental load off the trader. You don't have to be, I don't want to say you don't have to be as focused because you still want to be monitoring your systems, but because the strategy is automated or you're using a robot to maybe execute some of the trades, or a EA as it's called in MetaTrader, then some of what you have to do is taken care of, so you do have some more time to potentially trade some pairs. But again, going back to what we talked about before, the ultimate goal is to make sure that you're doing what works for you and your strategies. So if you find you're missing trades because you're a bit distracted, then you should probably add in or just make sure you're only trading one pair. If you find you don't have enough engagement because maybe you're trading a 5 or 10 minute chart and you're only finding a couple trades a day and you have time to find more, then you could maybe add in another pair. So swing trading, general guidelines, again, no hard and fast rules here. The more active you are, and by how active you are, I mean how active your strategies are. Some strategies find trades every few price bars, whereas other ones are going to look for big patterns like triangles or something in more price data. So it's how your strategies are. And the shorter the time frame, the less pairs you're going to need to look at. So the more active you are, the less time, the shorter the time frame, typically the fewer pairs you're going to have to look at. So for example, a price action trader using an hourly chart may only need to trade a few pairs, and that could give them a constant stream of trades and potentially multiple trades. So what I mean by a price action trader is, let's go to an hourly chart. And someone who's just assessing every single one of these price waves. So they see this, they see it start to fizzle out on this pullback, they decide to go short, price rebounds, they get out for a small profit, price starts to sell off again in an overall downtrend, they get short again, price starts to pop up here, they get out. So it's a really constant reassessment of how the price is moving and trying to take advantage of as many price opportunities, trade opportunities as they can. This is opposed to someone who views the market more as big patterns. So maybe they see this big pattern. This is just an example, not an actual trade idea. I have no idea how other people trade or how each person trades. But let's say they view this as a big range. So they're waiting for just a breakout of this range, just as an example. So in that case, during this entire time, they may only have one trade here, or maybe they get in or out on this retest of the range. And so they have one trading opportunity in here, where the price action trader took maybe 20 trades on this chart that we can see. So that's how it may work. You'll want to assess that for yourself. What type of trader are you? Very active? Then you focus on less charts, less pairs. If you're less active, like that trader that maybe just looks at the bigger patterns, your trades maybe last a little bit longer. You can potentially look at more pairs because that chart's not going to change every second if you're looking at a big pattern. If you're waiting for a range breakout on this pair and the pair's trading in the middle here, you know that it's going to be a little while till it gets to the trend line, to these trend lines you're looking at. You could set an alert there so that it lets you know. So you don't have a lot to do in the middle here until the price actually moves out of that pattern. Again, just an example. Trades that last longer, you can have multiple positions. Monitoring multiple pairs isn't an issue because, like I said, those trades are taking longer to develop. So you have the time to assess everything, place your trades, make sure you're managing them properly. Set and forget traders can monitor more pairs as well, as opposed to actively managing each position. So a set and forget trader is one that you see a trade, you put your entry order out, you put your stop loss order out, and you put your profit target out. And then you basically sit back and don't really do much with that trade. It either hits your stop loss or your target and you're out. And traders that actively manage each position are that example where I showed the price action trader. They're assessing how the price is moving in real time. If they start to see a reversal, they may get out. Whereas the set and forget trader isn't watching each movement. They've looked at how things look at the start of the trade, and they've set their targets and stop losses, and they're just going to let it play out. So this actively managing trades requires a lot more focus and attention. Too many trades going, you're going to have a lot of distraction, and you may end up missing opportunities. You may miss your exit point. You may miss your entry point. So set and forget traders can monitor more pairs. Actively managing positions, you're probably going to want to scale it back a bit. So I've compiled a little list here. The Euro USD, and I say swing trade, this could apply to day trading as well, but for the most part with day trading, as we talked about, you're going to be trading just a few pairs, but these would still apply to a day trader. The Euro USD is the top one. These aren't necessarily in any particular order. For a day trader, the Euro USD, the British Pound USD, maybe looking at the US dollar yen or US dollar CAD if you wanted to add a couple other positions or a couple other pairs to watch. But for swing trading, let's say you decide you can monitor multiple pairs. I would start with these, especially if you're a newer trader. You'll notice that each one of these pairs consists of major global currencies, ones that you've likely heard of. The British pound, the yen, the Swiss franc, the Canadian dollar, the Australian dollar, the New Zealand dollar, the US dollar. All major global currencies. We are still going to see like big moves. There's lots of opportunity, but typically none of these societies or countries is potentially going to declare bankruptcy overnight or something like that. Not that it couldn't happen, but these are pretty global, stable currencies. So we have this first list. If you want to add a few more, then you could start adding some from this second column. These are all still good pairs to trade, lots of opportunity. They all are still major global currencies, just different combinations of them. These are typically a little less traded than the ones in the first column. So maybe a little bit bigger spreads in some of these compared to this. Not in all cases, but definitely in some. Then if you wanted to look for a few more opportunities, let's say you're trading 4-hour charts or even hourly or daily charts, and you're just skipping through looking for your trade setups and you're not finding a lot, you could add in some of these pairs. So I call these the oddballs, simply because they involve a lot of currencies you may not be as familiar with. So these ones you want to be a little bit more experienced with because spreads sometimes are much bigger, but so is the volatility, simply because of how they're priced. But when you compare the spread and the volatility to their pip value, a lot of them aren't really any different than the pairs in the first column. They just take a little bit of getting used to. Pip values in some of these, we know that the Euro US dollar is $10 for a standard lot if you're trading a US account. So if you take a $100,000 position, the Euro USD, each pip movement's going to cost you $10 if your account's in US dollars. With some of these pairs, that pip value may be 50 cents, it may be 10 cents, it may be a little more than $10. So it's just, you need to know how to calculate pip value, how that's going to affect your position size, how that volatility and spread are going to affect your trade. So there's a little bit more going on in some of these pairs than with these other ones. So these I would recommend once you have a bit more experience, you're doing well with these, you're getting used to computing the pip values in these, which don't range as much as some of these ones that you'll see over here. Then you can start adding these in and looking for opportunities in these as well. Some people will say to shy away from these pairs because they'll say, oh, the spread's so big, the volatility is so high. But when you factor it all together, the pip value, the volatility, the spread, a lot of them end up being just like these pairs over here. So I wouldn't shy away from them. I would just wait till you're a bit more experienced, and I would only add them in if you're not seeing a lot of trades in these ones. So let's pull it all together. Most day traders are going to trade the Euro USD and have ample opportunity. Focusing on more than one pair while day trading, especially on a 1 minute chart, is going to mean you're probably going to miss the opportunities that are there. The exception, if you're trading a 5, 10, 15 minute chart, you may want to add in some other pairs because you do have some extra time as those bars are forming to check out some other pairs and potentially see some trades. If your strategies are partially or fully automated, you've taken some of that load off yourself, things that you have to do, so you could maybe add in another pair or potentially multiple pairs to day trade in that situation. Most swing traders can focus on multiple pairs. Start with that first column in the graphic on the previous page. Add in more pairs from the second and third as you feel comfortable. Some general guidelines: very active traders on short time frames or traders who actively manage their trades may want to focus on fewer pairs, most likely ones from the first column. Traders who have a harder time finding trades, maybe their strategies are based on longer term signals. Remember, I showed that comparison between the price action trader who may be taking 20 trades as opposed to someone who focuses on bigger patterns. They may be only taking one trade. So in that case, you could, if you're looking for those bigger patterns or you're using a longer time frame for your trades, then you could check out more pairs. The goal here is to self-assess yourself. Are you trading well? Are you missing trades? Are you taking trades you shouldn't be? These could be related simply to how much is going on in your trading. Are you trading too many pairs? Not enough? Are you distracted? Not engaged enough? You want to find your own happy medium. So hopefully this has given you a bit to start finding that. Back to the first page that we had talked about, you want to write whatever you've discovered or whatever you do discover when you sit down to decide what pairs you're going to trade. You want to write them down in your plan. Until next time, happy trading.